August 17th, 2023. We got a bigger leg two measured move today. You can see this, if you kind of blend the days together, 61 to 32, which is essentially, one leg. So if you do that and then that drop that on where 43 started in the second leg, we got a big leg two down to around the low of the day. Similarly, this leg subdivided. And so today you got basically from 1 to 13. And then if you put that after, you can see we got a rally right here from 14 to 17, which is essentially a pullback. And it did break the bear trend line. Then we got a second leg down to around here. The vast majority of bear channels end after 150 bars, 100 to 150 bars, which is usually about 2 days on the 5-minute chart. So it's pretty rare to see a channel that's lasting this long. Consider this the spike phase, and the channel has lasted about 200 bars, a little over. And what's interesting is we had a overshoot of the channel line today, which is really unusual. Usually about 75% of the time, the breakout ends up being to the upside rather than to the downside. And there's a lot of logic to it if you just think about it. So if you're in a broad bull or a broad bear channel, which is what this is, traders are basically buying back shorts around new lows and they're selling at highs. It's essentially a trading range, but it's a sloped trading range. And so if traders are, for the most part, not willing to short at these lows, they're only willing to short higher, why all of a sudden would they be willing to short aggressively? And so if you think about it like that, like traders, if they're not selling these lows consistently, why are they just going to suddenly start selling these lows? And it doesn't never happen. It's just, it's unusual for that to happen. And so that's why the majority of the time you get a bull breakout, because bulls are buying down here, and eventually it'll find a spot when it's lower where bulls will find value and buy, and it'll get a continuation or a reversal up. I hope that made sense. So long way of saying, I think we're pretty oversold for the next day or two. You can see this is a broad channel on this chart, and on the daily chart, it's a tight breakout. So on broad channels are tight breakouts on higher time frames. But I think that tomorrow we're probably going to get back to the 62 low. I think we're going to probably have a bull close tomorrow. The channel, we're pretty oversold in general here. So I think we'll get back to the 62 low. Generally, after a sell climax day, which is what you could consider today, there's a 75% chance of at least 2 hours of sideways to up trading starting by the end of the second hour. So I think that sideways to up trading will probably get us back to this magnet, maybe the 50 low if, bulls are lucky. Just making sure. Okay, so bar one, big bear bar, closing near its low. Probably not too much follow through because, it's already oversold. I was expecting us to rally a little bit today. Thought the 66 low would be an important magnet. Two, kind of bad follow through. And then you get three, which trades above, so it does technically pull back, and then you get a close on its low on bar three. So some traders will sell below three, deciding it's a double top and hoping it's the high of the day. Pretty much if you're going to sell below three, you kind of need this to happen. This is not a very high probability trade. It's probably better to wait for more bars. Bar four, bear bar closing near its low, and it's 4 straight bear bars, but this really isn't that strong. Strong bear trends, do a lot of, this is pretty climactic too, but it's a lot of tight bear, I don't know why I'm not just using today, but it's a lot of tight bars, tight channels. There are tails in this. This is not the best example of a strong bear trend, but you can see the bars generally aren't trading above the prior bar, and we get bar trading above the prior bar on 2, and we get it again on 5. And 5 closes on its low, but it's climactic. And because this is essentially just a parabolic wedge on a smaller time frame, you can take a look at a 1-minute chart. You can see it just basically ends up being a wedge on a lower time frame. It's really not very good shape. It's not a good example. Look at the 2-minute for a second. So you can see here, much better. Parabolic wedge down, and then, bounce. But all of that to say that, you probably shouldn't be that eager to take shorts somewhere in here, and it's probably better to just wait for a bounce because it's probably coming. Bounce happens on 6, but doesn't close near its high. Probably sellers above, probably buyers below. You do get those sellers above on 7 and buyers below 7 because 7's a low 1 short. And it is, bears will argue it's a bear trend from open, low 1 short below 7. They're going to sell for a swing, but it doesn't close very strong. So I personally wouldn't take it. Outside up on 8, but if 8 closes on its high, maybe you can buy 8, but I don't really want to buy anything here just yet. But I was looking to buy here. I should keep that. I should note that. I was pretty much looking to buy all the way down because this is not a very strong move for the bears. And this was extremely important, but I'll talk about that in a second. 10, sellers above 9. Makes sense they're sellers above. It's a bear bar. And, bears will argue it's a bear trend and this is a wedge pullback. And so some bears will take the short below 11, but it's a tight trading range and you're kind of at the bottom of a tight trading range. So I don't really want to sell below 11. 12, kind of bad follow through for any bear who sold below 11. If you sell below 11, you want a bar like 13, except you want it on 12. You just want immediately fast follow through, trapping bulls who buy below 11. And 13, big outside down, yes, but you're about to test a pretty important resistance area, support area, which is the 79 low, which is yesterday's low. So you're about to test yesterday's low, and this is probably a trading range, which means in a trading range, you're going to get disappointment. And so traders on 13 are really disappointed in 14. 14 is essentially a wedge, but I wouldn't buy 14. I think you probably could, but it's just a really difficult trade to take. 15, some follow through for the bulls, but not great. And then you get 16, which is bull bar closing near its high, which makes pretty much any bear who's short, hoping that we get a bear trend from open. A lot of them will give up on 16, causing a vacuum up on 17. Now, the problem with 17 is that any bear who sold above 15 is probably going to get out of break even. It's a trading range day, so you have to keep in mind traders are going to be forgiven. Traders can sell above 17, sell more higher, and they're probably going to get out around break even. Same thing happened on 40, kind of similar situation where you get 41, looks good for the bulls, and 42 kind of does too, but you have to keep in mind that we're probably going to get back to the 40 high, so it's probably not as good as you'd like to think it is. So 16, 17, a couple of big bull bars. 18, big bear bar closing near its low. We'll probably get back to the 17 close at some point. It's a trading range day, so you have to expect that those traders are going to be able to get out of break even. And you can see 36 was a vacuum test of the 17 high. 18, follow through for bears. 19, follow through for bears, and 20, up on 20 and then down on 20. So it's a second leg from 18 and 19, and traders will sell above 19 for a scalp. 21, inside bar. It's 2 legs down on an inside bar, but it's not a very strong buy because it doesn't close near its high. If it closes on its high, maybe some traders will buy trying to get back to the 17 high, but it's just a risky trade. 22, bear bar. Once you get 23, you could essentially look at this as a wedge and a failed breakout below the 14 low, because any bear who sold below the low, low 2 at 22, you're selling a third push though. So you don't want to be selling a third push. That's not a very good idea because a lot of times it turns into a wedge. And you can see a failed breakout 23, reversal up, potential buy above 23 for a swing to 17 low, but never triggers. You get 24, but it's probably going to be disappointing because you can see trader, all the stop order traders are pretty much disappointed today. Unless you bought above 16 and scalped immediately, every other stop order trader has been disappointed. If you sold below 3, you did okay, but then immediately disappointed on 6. You sold below 5, you're disappointed on 6. You sold below 11, you did okay for a second, but you had to be really quick to make decisions because you become disappointed very quickly. If you sell below 18, this is not the follow through you want. It's relatively disappointing. If you sell below 24, disappointing. So that's a very common theme in trading range days, and that's what this was most likely to be at this time. 26, I think I was on. So disappointing follow through for 20 bears on 24, on 25, 26 outside down, but not closing strong, just trading range. 27, bull bar, low 1 in a tight bear channel, but it's towards the bottom of the channel line. So probably more buyers than sellers below 27. And you can see we went down on 28, but bulls know if they buy below 27 and buy more lower, they're going to get out of break even, which they did. And then we got a bounce on 29 and it sold back off, probably because a lot of the traders, any bulls who were long anywhere for any reason, started to get this bounce, and we're in a tight trading range, so they'll just take profits. 30, you could think of it as 2 legs up on 29, down on 29, and then an inside bar on 30. But the problem is that it's right at the moving average. You might have to get back up to the 17 close, but you're probably going to need a couple legs to do so. A lot of times what trading ranges will do is they'll run easy stops. So, let's say 31 had triggered. A lot of times it'll just go stop out traders below, and then it'll reverse up. And, when it does that kind of thing, you often get a really quick vacuum up because a lot of those traders who got stopped out have to chase the market up. And so when you have a lot of traders that are trapped out, they chase the market and they vacuum it up to whatever resistance or support that the entire market sees. 31, low 1 short, but not very good. Bad follow through for bears on 32. And you can see that any bear who is short below 31, it's a pretty risky short, but 32 is not ideal follow through. A lot of them are buying back shorts at the market. You'll also note during 32, bulls are going to buy around the 30 low. A lot of people don't want to buy above 30, but they'll buy around the 30 low and below 30 for sure. 33 bull bar, kind of decent close, but tight trading range. Don't really want to take anything. 34, another bull bar, but not quite closing near its high. I was looking for a buy somewhere in here to get back to the 17 close, but I just don't think you can buy above 33 or 34. It's just really difficult to do. It's not high enough probability. We got like a second reversal bar. So like if you put, I don't know, is there even a single good bull reversal bar today? I don't know, let's say 56 closed on its high and you slapped that as an inside bar on 32. Like, so, 56 is like right here, closing on its high. That's a good double bottom buy for a swing with at least 2-to-1 risk reward. But, trading ranges just will kind of keep you trapped out. So that's why traders like to trade on limit orders during trading range days. You can see everyone basically on 35 became in agreement that we were going to test the 17 close, which is exactly what we did on 36. And we started to see sellers. But what's the problem, right? 34. Traders who sell above 34 should make money since it's a trading range day. So 37 and 38 follow through for bears. And you can see on 40, once we touch, some traders are so disappointed in 30, 35 and 36 that when they get kind of close on 38, they'll just take profits. Some traders will see 36 and 37 as leg 1, 40, the down on 40 as leg 2, and 40 touches the high of 34. So those traders are let out at break even. And you can see they immediately bought back shorts. And they were so eager to buy back shorts, they drove the market back up to test the 36 close. But now, again, 41, 42, you have a problem, and that's the 40 high. We're probably getting back to the 40 high. 43 was an interesting bar. I thought it was a good short. I took it, but I ended up just flattening a couple minutes later because I didn't love what it was doing. 43 did come and touch the 40 high and then bounce, and it just came back down and closed near its low. So if you look at like a 1 minute chart, I'm not going to pull it up, but if you do look at a 1 minute chart, you'll see that it came down, touched the 40 high, and then bounced and made this high, and then came back down and closed on its low in the last minute. But it's a reasonable short. It is a trading range day. I was just kind of worried because the reality is this bear channel was pretty oversold, so I was kind of against selling. But it is a trading range day, and it's reasonable to take the short looking to get somewhere down here. You get follow through on 44. Definitely okay to be short at this point. You have good follow through. It's not amazing. I kind of equate it to like, yesterday there was a kind of similar situation. Selling below 11, you get 12. 12 is not amazing follow through, but it does do the job. It's okay enough to stay short. So if you sold below 43, 44 is, while it's not like ideal, what you really want is about like 47, closing somewhere down here, breaking below the neckline of the double top, which is 40, the low of 40. But it's still good enough to probably stay short. 45, doji bar, might scare some traders out, but you got to keep in mind, would you ever buy above 45 trying to get above here? No, that's a terrible idea. So it's still higher probability that we're going to get another leg down, which is what 46 is. Some traders will sell below 46. It's a low probability swing, looking to get to at least a new low on the day. And you get big breakout 47, so big follow through. You now have 2 legs down and follow through on 48. We're at the bottom of a trading range, so you should be expecting some sort of support here, but this is pretty strong and it's a pretty tight channel. So any sort of bounce should be minor. The same way that this is relatively tight. And so even this bounce was probably going to be minor, especially with this 15 high remaining untested. 50, interesting bar, bull bar, but not a strong close. And a lot of bulls just dump their longs. But some bulls will buy below 50 and buy more lower, thinking they're going to be able to get out of break even. What's interesting is the traders who did that did not. You can see there's an open gap there. So any trader who bought below 50 was never let out at break even. And that's an open gap. And so you started to have trapped traders. So some traders will sell below a bar like 55, hoping we collapse, thinking that 50 is bad follow through, or 50 is probably not going to get tested, and a lot of those bulls will sell to their longs in the collapse. We also kind of have an open gap. So if you bought below 45, you can see on 48, or you're just never able to get tested, but it was higher in a trading range, and this is a less reasonable buy. There's still trapped traders, but this was more interesting to me. So 53, any bears, 50, 51 is where I was. So it's 3 pushes down, 1, 2, then pull back 3. But I don't think you want to take any shorts here. You're selling a third leg, and it's the biggest bar in the trend. So it's probably climactic. And at this point, it's likely that we're going to retest up here. 52, bad follow through for those bears. A lot of them buy back their shorts, and a lot of bulls will buy, expecting us to get back to this low. That's why you get 53. Bad follow through for bulls, 54. And then you get 55. Some bears will take the short, betting that we don't close this gap. But you can see, like normal trading range days, they're trying to trap you out. So you get disappointing follow through on 56, probably buyers below 56. So you get 57, inside bar, low one short. It's maybe an okay swing short, but you're in a tight channel. You can see this as the spike, and this is turning into a channel phase. You can see spike, and then the trend line becomes less steep channel. And then it doesn't usually do this, but today it just became steep again, which is very unusual. But you could see it as essentially some sort of contorted leg one, leg two. I don't know, maybe this will work. I haven't looked at this yet. Still around the same area that we went to. If you consider this spike, channel, and then spike again. I suppose if you use the entire channel, the spike and the channel, probably be closer, but yeah, I don't know. It's just interesting. But anyways, the reversal up, where was I? Oh yeah, 58, kind of bad follow through for anyone, short below 57. You wanted a big collapse. 59, probably okay to take profits above 59. And then you get 60. And what's interesting is once you get 61, it's a bear bar closing near its low, yes, but it's likely to be disappointing, and bulls will buy the new low. So traders will buy below 60 and buy more lower, and they should make money. So it's interesting that bulls were able to make money in this channel, but the bulls who bought below 50 weren't quite able to make money. So while this is okay for the bulls, and you can see it's probably transitioning into a trading range, there should be something a little eerie about the fact that bulls who bought below 50 are still trapped in, even though these bulls are able to make money. 63, inside bear bar, potentially a swing short, but I kind of equate it to 57. It's really difficult to take. Big bear bar on 64, essentially just a measured move down this trading range, 60 to the 64 low, you can see, and pulls back. You get a second leg down, 65. But again, 65 inside bar. It's okay to be short, and it's technically sell the close, but it's just hard, I think, to take these shorts. But it is a tight bear channel. So 66 follow through, okay, sell the close. 67 follow through, okay, sell the close. But there just aren't many open gaps, and there's a lot of big tails on these bars, so it's hard to want to sell any of this. And then big follow through 69, 70. 70 ends up being where there's a lot of profit taking, like two measure moves, like I was saying. And we go sideways into the close. Essentially, kind of an expanding triangle if you think about it. But anyways, I think we're gonna get a bull close tomorrow. Probably gonna bounce. I still think that Monday's low is an interesting probable magnet. We're not gonna get there tomorrow, but it's like 100 points above. So whenever we do get back to this, I think there will be some sellers. Stop orders is probably okay. I think the best trade on the day for sure was 43 or 44. These are both reasonable sells for swings. Probably reasonable to sell 47, but it's kind of getting low in the range, so hard to do. I guess it's reasonable to sell the close, but again, really hard to do. Maybe you buy as 35 is racing up, betting we're going to get to the 17 close, and your follow through isn't going to be disappointing. And if you do buy anytime during 35, you weren't disappointed in the close, and you hit your profit target on 36, so maybe that's okay. Limit order, it was a limit order trader kind of day though. Limit orders, probably buyers below here. I wouldn't take that though. I'm trying to think of limit order trades I would take. Probably buyers below 14 since it is a bear channel, but I didn't really want to sell above things today. Maybe I'm wrong for that, but I didn't really want to sell above things since I thought that the day in general we were oversold and we were getting moves like this, which makes me think that we were going to get a rally later in the day, especially once we got that and then we got this and started to pull back. This was stronger than I would have liked, but I was still thinking we were going to get a bounce up until we ended up getting this gap. Maybe okay to try and sell somewhere up here to get back to the 40 high. Maybe okay to sell somewhere up here to try and get back to the 34 high. I'm not very good at limit order trading. That's trying to figure out stop orders first. But yeah, for always in, it's probably always in short, by 3 or 4. Probably flipped always in long here for a second, and then back to always in short below 18. Always in long by 35. Back to always in short, maybe 44, definitely 46, 47, always in short, and stayed always in short the rest of the day. Yeah, that's basically it.